companies are encumbered with metrics of having, oh, you need to have X number of females in leadership positions. You need to hire 3 people of color. That's completely wrong.
Right.
And yes, that does help us, but if you're not looking at it as an investment, then those people will feel it when they come into the company.
Sure.
They won't feel included, there won't be equity in those hires, and they will leave. And you'll just be in the exact same position that we started in.
Welcome to the Elevating Leaders series, where we go beyond the headlines and straight to the people who are redefining insurtech and business transformation. We've caught up with the visionaries and the pioneers that are currently driving the industry forward, bringing you exclusive insights, strategies, and stories you won't hear anywhere else. If you're ready to go deeper, this is your front row seat to the future of insurance. I'm Miguel Edwards, and this is 5 Minutes.
Risha, thank you so much for joining me here on another episode of 5 Minutes. I appreciate you making the time out of your busy schedule here at ITC Vegas. There is a question that I ask all of my guests because getting into the insurance industry is not something that people typically plan for. I recently met for the first time someone who actually planned to be in insurance. Yep. What's your backstory?
It was not a plan.
Okay.
I am definitely in the majority of the industry of not having planned this career path. I've had somewhat non-traditional entry into the industry. My background was finance, accounting. It was kind of the first job that popped up while I was graduating and was applying for jobs. Mm-hmm. So I actually started out as a temp in the consulting group within Guy Carpenter and Marsh. Okay. That was kind of my first foray. And I loved it. My boss I worked for at the time was real old school underwriter, has seen everything and just threw me into the market with paper files and all these different claims to close and projects like that. And I really enjoyed it. Continued along the path of accounting and finance, sat on a number of teams that were client facing, doing analytics, strategic advisory work, hit somewhat of a career wall, if you will. And then was recommended for the role in New York. So I transferred with that company to New York to be part of a brand new team that was focused on insurtech, innovation, product development. At the time, no one really knew what that meant. It's 2017, 2018. Yeah. So I came over, I thought, New York is New York. I came from London. How different can it be? If it sucks, I'll just go back to London. Right. But 6 years in and I'm still here and I love it. So we grew that into a consulting practice. Okay. I wore somewhat of a consulting and then reinsurance broking hat, working with a lot of MGAs to help them place capacity. Got it. And then was picked up by Arch last summer to help join their team and help manage their investment fund. So
congratulations.
That's pretty much what I do now full time. Okay. Still working with MGAs, still looking at insurtechs. Everything to do with digital distribution is my world now, but I get to sign the checks.
I love that. That's an awesome, great story. Yeah. So I've got to ask, what kind of lens do you put on kind of the opportunities and the investments that you analyze? Give me an idea of what that looks like.
Yeah. So with Arch's fund, it's strategic investing. So the thesis is very simple. We like to get in early stage investing, seed, Series A, because we're in a very invest and learn mentality. We want to get in early, we want to learn, and the investments are really to drive new business growth, enter new markets, new segments, lines of business that we don't currently write today, or frankly don't want to build the expertise for from the ground up, and we can do that through investments. And for the most part, the portfolio has been MGA businesses and distribution partners for that reason. Mm-hmm. But we will look at SaaS companies. There are, a number of vendors and solution providers that Arch works with on the analytics side, on the underwriting side. And if they're raising, we might come our way, it might not. But for the most part, it's been MGAs.
But the technology doesn't necessarily have to be complementary to the MGA world. It can be in other things.
Oh, absolutely.
Okay, got it. Makes a lot of
across
sense.
The business, yeah.
I was actually in a session earlier today where the folks at Celent, they had a panel that was going through. Were you in that session?
I was actually in the Viewpoint Ventures session, but I used to work very closely with Celent, so I know that team really well.
So Nathan Golia, who was kind of running the whole thing, and one of the fascinating points that was made is that we're starting to see, because the exits haven't panned out the way they were supposed to be, we're seeing a pretty significant downturn in the amount of investment that's available. Are you guys seeing a similar picture?
It's interesting. So yes, the numbers point towards less investment, but it depends what lens you're looking at it with, because if you look at the peak where everything was just overinflated, overvalued, and how it's completely come down across 2022, 2023, we've actually seen an uptick in 2024 in terms of investment if you just look at that small cycle. But overall, it's less than prior to COVID. So that's the lens I think you're coming from with the question.
Yeah.
But if you look at just the first half of this year, there's actually been smaller deals, but focused more on early stage companies. So we're seeing an extension of the seed and the Series A, and it's kind of creating this bottleneck right here at the beginning because valuations are lower and it's more difficult to raise money as a founder now at this point in time. And so I think it depends how you're looking at it, because I would see that not as necessarily a bad thing, considering we're looking at early stage companies. So this creates a lot of bottleneck, but then also bootstrapped MGAs that we can then offer our services and our investments and kind of getting our foot through the door that way. And so I think it depends what lens you come in. Generally, the investments are down, but it depends on which stage you're investing and what types of investments you're looking to do.
Got it. So when you think about those early stage opportunities, what are some of the criteria that folks are looking for to make a good determination?
For us specifically, it has to be something that's unique that we're not doing. So obviously Arch writes specialty commercial just across all these different lines. And so we are known in the market, our brand is being expertise in these niche risks and these specialty large commercial risks. And so a lot of my focus has been on, say, small commercial offerings, lines of business that we don't necessarily write, that we can now do that through investment. So when it's something different than what we're doing right now, or a distribution channel that we've never even considered, or targeting a customer base that just wouldn't normally fit our appetite. Those are kind of the things that I would look out for in terms of offerings that we would be interested in investing in and learning from.
Got it. That makes a lot of sense. Now, is there any kind of requirement that there be a technology component to what they're bringing to the table when you think about that uniqueness?
Yes and no.
Okay.
So I've actually, since I've joined, we've made, I think, 2 investments since I joined last year, and a number of that before that, an acquisition last year as well, and then again this year. And one of them didn't necessarily have, I wouldn't call them an insurtech, but they were a new MGA and they were doing something really interesting, versus some of the others where it's very clearly a technology play and they've set up an MGA business model. And so we would look at both. We would look at both.
Got it. When it's interesting. One of my prior guests is from AM Best and specializes in the delegated underwriting authority entities. DUA. Yeah, exactly. Yeah, and one of the things that we talked about was this incredible kind of this upcropping of MGAs in the space. What's driving that?
Yeah. No, it's great. I mean, we're riding the wave. Arch is known for acquisition, so I'm constantly having my eye open for really good deals. But it's because, and especially in the commercial line space, I want to say in the personal line space, it's kind of been done. We've seen a lot of these personalized MGAs IPO'd. There's a great phrase that was mentioned today on I think it was Ori from Viewpoint Ventures said, a lot of those unicorns have now become zombiecorns because they're flush with cash, but their performance has been doing this.
Sure.
That was just a great phrase. I think I'm going to be repeating for the rest of the week. But I think it's because, especially within commercial lines, it's still ripe for disruption. There is so much inefficiency within commercial lines that, especially in kind of low premium but high volume businesses like in a small commercial space, that's perfect for an MGA to come in, because MGAs can be much more flexible, can be much more nimble, they can be innovative. It's almost like having a more entrepreneurial mindset if you're in an MGA and it's a small shop, but you're doing very specific niche and you have that expertise knowledge. MGAs can do that. A large incumbent carrier can't necessarily do that. And so setting up that business model is frankly sometimes easier to do than trying to create a brand new thing within a large incumbent, and that could take years to get off the ground. MGAs are really good at doing that. And for us specifically, MGAs, I think even themselves are learning that they're a really good conduit to bridging that gap. And that's how I view the MGA space. And so the fact that there are so many cropping up that are now competing with one another is fantastic.
Yeah, no, it sure is.
It's a great pool to look into. And there are so many niche risks that aren't really being given the right attention to. And if you've been an underwriter for a while, you have specialty expertise in an area, why not set up an MGA?
Right.
You absolutely can have the pen and you can write that business, and you will find capacity because of the network you've built throughout your career. So I think that's why we're seeing a lot of them pop up.
Yeah, I love that.
It's less capital intensive too.
For sure, for the MGA, for sure. Yeah, so, I think similarly to you, I got my start in insurance at Willis, and one of the first areas that I was focused on was in their program business.
Yes.
And so my question is really around My experience with MGAs is really kind of exchanging bordereau level financial data. And it's kind of like, trust us, we got it.
Yeah, don't worry about you.
Don't worry, 100%.
This is just a formality.
Exactly. It's not the same now, correct?
No, it's not the same.
So what does it look like now? What's that data relationship look like?
It's the same. We still have to exchange the same information from a regulatory perspective, accounting, audit perspective. But our decisions, especially from an investment perspective and from our programs team, is very heavily, driven by underwriting. So we wouldn't really invest in an MGA if whether it is the programs team or a specific business unit or even Arch Re has looked at the underwriting and has agreed, you know what, these are the guidelines, these are the policy wordings, this fits our appetite, or if it doesn't, how can we amend it so that it does, so we can be the paper on this? And so it's purely underwriting driven, the decision making in that process, and the same data that you would have going back and forth with claims, losses, policy data, it's the same thing.
Are you seeing the data exchange being more frequent so that you have an opportunity to see things as they're coming and seeing loss trends breaking bad before you get that month-end report?
Depends. So some of our investments are too early stage to say that there's a trend yet.
Okay.
But honestly, some of it's even real time.
Wow.
So there are some MJs that are really digging into, earlier you were talking about AI and use cases, digging into getting some of that real-time information data, dynamic pricing, depending on the type of predictive analytics you're using and what the solution is. So I think we're moving more towards that model where, sure, you could have a monthly bordereau, and I know that's a very traditional way of sharing that data, but frankly, with some of these insurtech MGAs, you could ask at any point in time, just send me a snapshot of the policies you've written in the last 20 days, or what's happening today, or what's happening in the last X amount of time. And they can just quickly, with a few clicks and buttons, send you that information.
I imagine that makes them more appealing and more attractive to work with, right? Yeah, for sure. Yeah. So along those lines, Risha, what are some of the technology things that you're focused on, that you're thinking about, even outside of just necessarily from an investment perspective, but as you're watching how this technology could impact what it is that you do within the industry? What are some of the things that you're looking out for?
I don't want to say AI because
well, we got it. We have to. No, it's obligatory.
I feel like that's an answer for everything, but honestly, that's probably the main one because. Yeah. And I was having this conversation earlier. The reason why everyone is talking about it, yes, it's because anything with AI attached to it is getting funding. Fine, that's ride the wave. As a founder, you should. Yeah. But it's because you can apply AI and AI use cases along the entire value chain. Yes. There isn't one part of the insurance value chain and reinsurance value chain that you can't find a use case or a solution that's AI related that would help in any part of that. And I think that's why. So I'm generally trying to stay on top of the entire thing, just to see what's happening, because our team acts as a funnel for a lot of startups that we would then introduce to strategic analytics, to other business units that aren't necessarily underwriting per se, but still need technology solutions to improve efficiency. And we're very analytics forward. So anything to do with analytics, ingesting data, underwriting, improving just kind of how that data is ingested, all its different forms. Can you take unstructured data and put it into the format that we need it? These are all the things that I've been hearing and the feedback I've been getting internally within Arch that I try and keep in the back of my mind when I'm seeing pitches or I'm at conferences like this and a startup pops up in a panel and I'm learning about what they do. Those are some of the main things. And I think we're also seeing this interesting wave from even just IoT and connected devices, where we're going from installing a dongle in your car to real-time data for commercial fleet drivers. That's a really impressive transition from just a few years ago. And so these are all the things that I find really interesting, even though I'm not necessarily investing in those spaces. It's just nice to see the cycles and how far it's come from when I first heard the term IoT. Yeah, no, I love that. You remind me of, I've got a partner that did some work for Great Dane, the trailer company, and they have implemented something called Fleet Pulse, where they have IoT on the entire trailer. The reefer temperature, the tire pressure, brake functionality, all this stuff. It's absolutely amazing. I digress. But I wanted to ask you this question. Depending on who I talk to about the kind of the movement of AI, some people feel like it's going frustratingly slow for our industry, and some people feel like it's going way too fast. Where are you on that spectrum? I don't think it's going slowly. I actually think it's going quite fast. Okay, but in an exciting way, not in a stressful way.
Not scary. Got it.
I think I've been in the insurtech innovation space since I moved here, so 6.5 years, and compared to where we started in 2017, 2018 to where we are now, I actually think this is one of the periods of time where we've actually adopted the quickest to new technology. I mean, think about when we first started even just moving away from paper to then straight through processing to then automated claims and all these waves we've seen. We've adopted this generative AI, all these different platforms so quickly that the conversation of should we do it, should we not do it didn't even really happen. We've just jumped straight to, so how do we pilot this? How do we create governance? How do we protect our personal information, PII from, our customers? And so I actually think it's gone really, really quickly because the adoption phase didn't really happen. We've just gone straight to how do we experiment? And I think that's really impressive for our industry
100%.
That's known to be really slow in adopting new technology. This has been the quickest adoption I personally have seen. And I think that's great. So I don't think it's slow at all.
Okay.
Implementing it, sure, because we just have so much regulatory red tape. And we're dealing with a lot of sensitive information. So it needs to be governed correctly. We do have to be careful about what we're sharing. I use Perplexity for everything. And I think, okay, I need advice on this. Oh, but wait, I shouldn't put these numbers in because it could give away my personal information. And even I'm as just a casual user. So I can imagine within the walls of an insurance company how delicate that balance is. So I think that's probably the piece that's taking really long. But I think the adoption that we've had to something that's new, especially in our industry, has been quite impressive.
Do you think it has anything to do with a generational shift that's occurring in the industry?
I don't think that's
No?
the biggest factor.
Okay.
No, because, I work with all different generations and even like family members and friends that are, older, they were using it at the same time I started using it. So I think there's an aspect of just curiosity to just know what it's all about. And then once you've used it once, whether you're good with technology or not, you're absolutely hooked. Like, I have relatives planning their holidays on it. They're not asking me anymore. Fantastic. You don't need recommendations. Go and ask ChatGPT. And so, yes, in terms of creating and developing these things and even just being able to think of a solution that can do this, that is generational. But users, I think it spans quite a broad range of users.
That's an awesome observation.
I don't know if it's correct. That's just my observation, but I think
it makes sense. I mean, I think he reminded me of my dad. So my dad passed 10 years ago, but I remember my dad like dying to use an iPhone. He could never actually make it work, but he was an adopter. He really wanted to do it. But I think it makes a lot of sense. That curiosity will drive you there if you've got the right mindset. Along those same lines, though, Risha, I mean, we talk a lot, especially on my podcast, about this looming talent crisis in the insurance industry. We've got, this kind of massive wave of boomers that are going to be retired. My generation of Gen Xers, we're statistically insignificant to the population. That's so
harsh.
But it's true though, right? I think there's like 19 million of us in the entire population.
It's the biggest generation.
And then you get the millennials that come in. What does that shift look like for you guys, and or just in terms of your own observation? What are you seeing? What do we need to prepare for? What norms need to be broken, et cetera?
I think that's a big question. I don't know how and if companies are preparing for it correctly, I'll be honest, because you have the talent piece is really important. And I think companies, especially since George Floyd and this focus on DE&I that's kind of wavering out, but that's a whole separate issue. Hiring from a broader, network is definitely something that companies have started doing over the last few years. So great, you're getting some talent in. It probably spans different age groups, but the retention piece hasn't really been given enough attention to. And so, yes, we're hiring more diversely, but you're not able to keep talent in these companies or even in the industry for various reasons of like not promoting, not training properly, or them coming in and feeling like a minority, and that's really tough. And so they just go and do other things and take their talent elsewhere. And so, yes, there is a talent crisis for the reasons you've mentioned in terms of a wave of professionals that are retiring and moving on, and they haven't transferred that knowledge. And there's a huge gap in the middle of like middle management that doesn't exist because you have young professionals and then retiring professionals. And this gap here, and I don't know if there's a solve for this, but if companies are able to put attention to how to retain talent, I think that will solve itself. Because you have extremely ambitious young professionals that are coming in, are picking things up so quickly, are using all these technology and solutions that didn't exist 10 years ago to help them with their jobs and their roles. They're, doing courses in computer science. They're learning prompt engineering, which is going to be the main focus if we're adopting AI tools. They exist. They're here. But how you keep them, how you train them, how you incentivize them to stay in these traditional corporations is, I think, the main challenge. But I think that being able to address that will solve some of that talent issue.
Interesting. I'm about to get in trouble here. My team
I'm always in trouble.
I like to be in trouble as well.
I'm always in trouble.
My team has told me that I need to stay away from the D word. But you mentioned it first.
Not. Absolutely.
You mentioned it first, so I'm going all in. I'm going all in. I saw in your background that you've got a lot of work in DEI. It's been a passion of mine. I was an active executive sponsor of many ERGs at Allstate. So talk to me a little bit about this. The way it's been co-opted, I think, is killing me just in terms of how DEI has been co-opted. But I heard you say something about retention. And I think there's a connection I want you to explore with me between that inclusiveness piece that no one wants to talk about. Yeah. They're just focused on the diversity piece and that retention. Because when I think about your generation and the one that comes after you, you guys want to have meaning and bring purpose to what you do. That's kind of what I hear in all the demographics, right? So why don't we bring it back, the conversation? Why don't we bring that conversation back?
I think... So going back to when everyone was learning about unconscious bias and these new but not new concepts of why we feel a certain way in the workplace and why D&I is important, a lot of people, and this is just from personal experience of having these difficult conversations with colleagues at the time, a lot of people don't like looking in the mirror and realizing that they've been part of the problem. And that speaks to the majority of large companies in our industry, the executive leadership, the management level, very homogenous. And I think there was a moment where they really didn't enjoy realizing that they're part of the problem, if not the cause of the problem, even unconsciously.
Sure.
And so I think that's the main reason why this idea of inclusivity, which is actually the real root issue, if we really think about it, there's an aspect of not wanting to even just go there because it's uncomfortable, but also not wanting to be held accountable for because once you've identified a problem, you then have to put measures in place and goals and initiatives to tackle said problem. And I think that's the bit people want to avoid. Leadership want to avoid that because then they become accountable for, you identified X, but you've shown no progress in the last 3 years. This is going to be held against your performance. This is going to affect your compensation. And frankly, that's where it should go. Otherwise, things are really not going to change that quickly, maybe not even in our career generations.
Right.
But that's ultimately what needs to happen. And I think everyone knows that, which is why it's kind of become taboo to talk about it. Not amongst us, obviously, but we're not in the room to make those changes. So
exactly.
All we can do is advocate, but ultimately it comes from them. And I think that's the issue.
What's your message for the young Risha?
I have so many messages.
who's coming up and facing a lot of these challenges that we don't want to talk about in the open anymore?
Yeah.
How do you counsel the next generation of insurance professional minority who doesn't look like everybody else coming up in this world?
Honestly, keep doing what you're doing because depending on, what your ethnic background might be, if you've come from, generation of immigrant parents, whatever it is that's made you different to the homogenous group that our industry is known for being in leadership positions, we're really raised to have the best grades, to stand out in every way possible, we're always overachieving.
Right.
And frankly, at some point in time, we're going to get those jobs, we're going to get those promotions, we're going to get the opportunity to be in America from London, small town in London, So if you keep doing what you're doing, eventually, that kind of merit-based reward and opportunity is going to come. Not for everyone. There is an element of luck, right timing, right people, right managers, right advocates. And I've had a lot of that along the way and also not had that along the way. So I would definitely say keep doing what you're doing. But also, I think the way that DE&I is viewed is something that I've learned just in the last couple of years, being in, more of a role where I'm managing things myself. And now I've noticed younger professionals are coming to me. I'm like, I'm not a young professional anymore. So I don't fit in that camp anymore. So I'm actually trying to guide them. DE&I is not, it shouldn't be viewed as a problem that has a solution, that has a one fixed solution. It's not like a technology problem you create a solution for and then you deploy it and then boom, you have efficiency. That's absolutely not what it is. And I think even for myself, I was viewing as D&I as a problem and we need to fix it. D&I is an investment.
Yeah.
is absolutely an investment. It's not a problem, it's an investment. And I think drilling that into the minds of leaders, into the minds of people actually running companies is really, really important, because we work in innovation. We have experience in innovation. The way that we attempt to innovate is by solving problems. Absolutely. But I think D&I has been approached in that same way, and that's been incorrect. So we're now companies are encumbered with metrics of having, you need to have X number of females in leadership positions. You need to hire, 3 people of color in the next cohort. Like, that's completely wrong.
Right.
And yes, that does help us. But if you're not looking at it as an investment, then those people will feel it when they come into the company.
Sure.
They won't feel included. They won't be paid equitably. There won't be equity in those hires, and they will leave. And you'll just be in the exact same position that we started in. And so drumming it into my mind from very early on that D&I is an investment, and that's the case I should have been making when I was in my younger days, trying to run ERGs and start new things and really challenge leadership. And I definitely got in trouble for it. I actually got to the point where I was so frustrated. I was like, go on, fire me. Like, I dare you. Like, no one else is saying it. I'm going to say it. Fire me. Because I got so fed up, like trying to push things for everyone coming behind me, and just hitting the same wall of, well, we have statistics, but we can't share them with you. I'm like, I need the data. I already know what the data says. I just need you to tell me what the data says. And those were the really tough conversations that no one wants to have, but that's what's going to help move that mindset from D&I is a problem to D&I is actually an investment. And it's an investment in your company. It's an investment in the talent. It's an investment in being able to innovate. There's absolutely a connection there. I could talk about this like for the entire rest of the week. So I don't.
I'm gonna
go. Like, set me off now.
I'm gonna go one level deeper. And again, if and this is way off script, so if you don't want to talk about this one, tell me, we'll edit it out, right? But so we've already identified the fact that I'm at least I'm a one generational level above you, right? As I'm over here in this X and you're in this millennial space, and I'm thinking back on my career, and I'm thinking about the incredible plight that I dealt with around imposter syndrome. It was debilitating at times for me as a young officer of a massive corporation who didn't feel like I belonged at the table I was sitting at. You seem to have an incredible amount of confidence that does not impact you the way it impacted me. Yeah. I want to learn and understand how you would coach someone in my space coming up. I'm a 32-year-old person of color joining the officer ranks who doesn't feel like they belong. How do you coach me?
I'm confident, yes. But there are definitely times where I'm sitting in a room and I'm like, why on earth am I in here? Like, what do I talk about all these people with that have nothing in common? I've definitely had those moments. Okay. But I don't know if I would call it imposter syndrome.
Okay.
Because I think early parts of my career, I was doing qualifications. Became qualified accountant, got my ARE. I was constantly learning and developing and kind of adding those things to my CV, to my experience. And so every time I was in a room, I knew that I'd earned my place to be there. And I also knew that because of who else was in the room and who actually invited me, they would never invite me if I hadn't overachieved to be in that room in the first place. And so that was, and I don't know if that's something that someone told me, and I don't remember that point in time where I made that connection of, okay, I shouldn't be in this room. If I'm really looking around, I clearly don't fit into this room, but someone's put me in this room. So clearly I have a reason to be in here. So I need to make sure that I live up to that.
That's the one.
And so that was, I think very early on, I had that mindset of like, okay, well, I'm in the room, and I asked myself, why am I in here? And half the time it was to listen, because I realized no one else was actually listening to what other people were saying in the room. And then it would be like very end, okay, so now we have to go around and everyone say like, what is your idea? What is your takeaway? And I'd say all these things and everyone's like, whoa. I'm like, yeah, well, you didn't listen to like what she was saying. You didn't listen to what he presented. You were just thinking about what your response was going to be. And that was kind of how I learned active listening before I realized it was called active listening. And so I started off as like the fly on the wall in many of these rooms because I didn't really know why I was there. But frankly, I had someone that put me in that room a number of times in different roles and different scenarios. And then I got really good at working with clients because these are just my personal skill set that I guess I've developed over time without realizing. And then I got loads of good reputation with clients. And so I got to build my own books of business. So, it was a knock-on effect after that. But in terms of if I was advising someone, honestly, just remember why you're in the room. And if someone did put you, because you have to be invited. Right. You're not getting in there yourself. Right. Someone has invited you. And if you're not sure why, ask them. Because I had to ask my manager sometimes, like, why am I in this meeting? Like, do you want me to take notes? Like, is this what's happening? And I'm like, no, you did all this work. You should talk about it. I'm like, oh, okay. So sometimes you need a reminder, but don't be afraid to ask why you're there.
That is awesome.
There's so many people in that room that shouldn't be there. They're definitely not asking that question. So just make sure you know why you're there and then serve that purpose, and people will pick up on that very quickly.
God, I wish I had that insight.
I've never thought about this before. You just because you're asking me now, I'm like, what was I thinking when I was in these rooms? And I think that was it.
That's awesome. I love to hear that. That's great. All right, well, I'm going to bring it back to ITC, and we'll close out with a final question as I clear this little tear from my eye here. What are you looking forward to seeing here? What are you looking forward to experiencing while you're here in Vegas?
Well, this is the first time I've ever been in an interview podcast. So, first time for everything. Awesome. I'm definitely going to write about this. This has been really fun. So this is something I was looking forward to, something new. This is, I think, ITC 6 for me, maybe. Okay. I've been to quite a few now, and I've definitely never done this. So thank you so much for inviting me, for having me. But frankly, similar to what Brian was saying, I've been coming year after year. The best part is just seeing everyone. Yeah. Seeing everyone, catching up, and just picking up what everyone else is doing. Because it's not going to be in articles. It's not going to be on panels, frankly. It's going to be in these happy hour conversations. Like, so who did you invest in last week? Like, what is really happening there? And, how's this partnership going? And do you have anything, like, just these tidbits that you pick up, just socializing and being at all these different events. That's the bit I love the most. Love that. And you make so many friends that way. That this industry is very small, as you know. Sure. And so seeing everyone year after year, old clients, old colleagues, things like that is probably my favorite part.
Does it feel like it's more meaningful post-COVID?
Yeah, it is.
Yeah, right?
It is. A lot of businesses struggled during COVID. A lot of teams struggled during COVID to gel. And this is definitely the perfect... I mean, we're in Vegas.
Yeah, I agree.
There's no better place to bond than in Vegas, and then it stays here.
Exactly right. Well, Risha, thank you so much for this time. This was an amazing experience for me. So I appreciate you coming on our little podcast here.
Absolutely.
And look forward to seeing you on the show.
Yeah.
Awesome.
Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.